With us now is Tim Seymour of Seymour Asset Management and a CNBC contributor. Tim, it's good to have you. Which of these stocks would you be buying now?
Hey, Kelly. Look, it's been a very interesting run for these names, and clearly, if Delta variants are accelerating, you'd think some of these stocks would be starting to rally. We're not really seeing it, but look, when I look at Amazon, they were the poster child of stay-at-home or beneficiaries from COVID. They were the first out of the gates. This stock's been dead money, so it's not down significantly, but it's flat while mega cap techs really outperformed. If you look at those the second quarter numbers, the big problem was really that it was somewhat mixed, slightly light top line, but that the third quarter guide was terrible. At its core, the e-commerce trends that were accelerated in COVID, so all of the stay-at-home dynamics, I think, are the long-term thesis everybody knows. In the short run, though, AWS was up 37%. They switched to at least more enterprise customers, continues to grow. And I think Amazon, first of all, is the first place you start when you look at these companies.
Okay, so Amazon you'd be a buyer of. What about something like Peloton?
Well, I mean, I think you've got a case here with a Peloton or a Zoom, where I think the valuations are really, really tough relative to where I think at least the near-term growth are. When I look at some other, a couple other names that I think make a lot of sense here, DraftKings, which just completed a pretty big deal with Golden Nugget, a case where I think, again, staying at home, online sports betting, iGaming, these are trends that are only just beginning. This company is consolidating a space that really continues to grow on the addressable market. So like that a lot. Zillow, another one of these names that I think the real estate market boomed, staying at home, people shopping around, some of these migration trends that are going on in the housing sector are ones that I think very, very early stage, what they're doing with their IMT and their premier home offerings. Look, inventory's improved. A lot of the froth's out of the stock. It's down 50%. The valuation doesn't make sense, but the secular themes are alive and well here.
Yeah, I mean, the fact that Zillow's down 50% in one of the strongest housing markets, even Rocket, some of these other players just haven't done as well lately as you might think. So you're not a big fan, valuation-wise, of a Peloton still, but you like DraftKings, you like Zillow. I mean, so this is kind of picking from the basket of the traditional stay-at-home plays. What about somebody like Netflix also has gone nowhere?
Yeah, when I think about the move that Netflix has made in the last couple of years, and really that it's been largely dead money for a year, I think the valuation has caught up to it. I think the competitive landscape has caught up to it. They obviously got a boost out of the gates with COVID. Look at Disney subscriber numbers yesterday. I think a lot of people are concerned that Disney's not going to be able to compete with Netflix on ARPU. But I think Netflix, to me, is showing longer-term dynamics around the challenge between a company that's never really made money, huge cash burn, have to invest in content. And I think there's better places to go in streaming and media right now. And in fact, I think Disney is a better place to go.
It's amazing to see Disney trading at a 50 PE, by the way. Even as it wiggles around, its multiple has really increased. Let me just zoom out of this whole discussion for a second and ask you, so earlier today, JP Morgan put out a note where they said, look, the COVID numbers are trending really, really badly. This thing is spiking. It's starting to look in some of the states like it did during the worst of it last winter, and it could continue to get worse. And it was interesting because they then said, the economic conclusions from this are a lot less clear because so few places are really trying to do any kind of lockdowns. I mean, maybe you're getting some mask mandates, maybe pushing off return to work. But Tim, my question for you is, should looking at stay-at-home stocks be the strategy for investors right now? I mean, haven't we already been through this? Don't we know that there might be a little bit of opportunity, but then, the performance from the highs tells you just how risky they are? I mean, what do you think is the right strategy, just broadly speaking, for stock picking right now?
Well, look, it's interesting because JP Morgan, I think, to their credit, in April, May, June last year was early to get out there and be bullish on the market and point out some of the dynamics that are not only in terms of ownership of the market, but where they actually thought that there was going to be opportunities. And the great irony is, of course, this week we've heard Southwest talk about some of the impact on their third quarter numbers. So the airlines have chimed through and talked about Delta variants, and yet the stocks have actually gone sideways, in some cases rallied a little bit. As yields rise on a day like today, there's some sense, as yields fall, bonds rise on a day like today, you're pushing back down on this, this growth headwind. And yet you'd think that a lot of the big industrial and resource names and reflation trades would be getting hit. They're not. And I think the biggest impediment right now for these stay-at-home stocks is that ultimately in most cases, the valuations don't make sense. Delta variants, while socially we're going through a very difficult time here, I think we're now able to kind of look past the third quarter and the fourth quarter. And while uncertainty, and JP Morgan talks about the unknowns that remain, I think we've seen kind of the worst of the market's interpretation of what the Delta variants mean for a lot of these stocks. So I think actually reflation trades are going to continue to see the bounce off of really what had been a pretty devastating 4 to 8 week period for them, despite the fact that today there are, the bubbling up growth concern.
Shepard Smith here. Thanks for watching CNBC on YouTube.